Hey everyone, this will be a Optimum FX weekly analysis. We'll be covering our major currency pairs and commodities. I'll be talking about potential trade ideas throughout this week. Firstly, we're going to look at what macroeconomic data we have coming out this week. All right. So, firstly, we'll look at the US. Okay, so there is plenty of data coming out throughout the second week of May. It's currently 8:30 p.m. right now. Currently where I am at the moment, it's 12 hours until market open. So yeah, let's dig into what data we have coming out this week. On Monday, we do have bill auctions, and we do have the annual and monthly red block index. We do have a Fed member, Fed Williams, speaking on Wednesday. Throughout that week, as usual, we got weekly crude oil stock, mortgage applications, and CPI data. Right, so that's going to be very impactful with our US dollar pairs, which includes gold and our US indexes. Okay, we do have Fed member Clarida speaking subsequently to those reports. On Thursday, we do have the monthly budget statement, PPI data coming out. And jobless claims data, right? And on Friday, at the end of the week, we do have IPI and EPI data coming out, which is essentially like the imports and exports of goods and services. Your import and export data can be seen as like a pre-trade balance data, because that's what the trade balance is. It's just with a trade balance, you either got a trade surplus or a trade deficit. If there's more imports than exports, you obviously have a trade deficit. If there's more exports than imports, you obviously have a trade surplus, because that economy or country is selling a lot more goods than buying goods, right? And then later in the day, during NY session, we do have the Michigan Consumer Sentiment Index, business inventories, and US oil rig count as usual. Has been along with economic sentiment the following day. There's not much happening in Europe this week. We do have the non-monetary policy ECB meeting, along with industrial production annual and monthly data. And we do have monetary policy meeting accounts meeting, the ECB. All right, let's move over to the UK. So there's nothing extreme happening in Europe this week. So UK, we got the quarterly house price index data coming out. We do have like BRC like for like retail sales, which is like a pre-retail sales report before the official retail sales data comes out. We do have the Bank of England Governor Bailey speaking on Wednesday, along with trade balance, GDP, manufacturing production. And we do have Governor Bailey speaking subsequently to those reports. And we do have a quarterly GDP estimate to end the day. So yeah, on Wednesday, like these reports are coming out, I believe, a couple hours into the London session. So our UK pairs are going to be ranging prior to that in Asian session, but we will see a lot of volatility and volume once these reports actually come out. We got the House Bank of England member Cunliffe speaking, Governor Bailey speaking on Friday, and that's all we have for the UK. So plenty of data coming out on Wednesday. So yeah, that's just one thing to look out for. So let's move on to Japan. Nothing too much happening in Japan this week. On Tuesday, we do have overall household spending, leading economic index. We do have the current account along with trade balance and foreign bond investments. We do have money supply data coming out. So yeah, a bit of data coming out in Japan. Yeah, so That's one thing to look out for. So let's go to Canada. Canada, we barely have anything coming out this week. All we do is just have central bank members speaking along with sales reports. All right, Australia. So let me just firstly say the federal budget statement actually gets released on Tuesday. For some reason, it's not showing on here. I'm letting you know now. But yeah, federal budget balance, federal budget statement is actually released on Tuesday, which is going to be very impactful in the Australian dollar because the Treasury is going to dictate how much money is going to specific industries, which can be, which can appreciate and depreciate the Australian dollar. It just depends on the outcome. Okay, obviously, but on Monday to start the week, we do have business confidence along with retail sales. On Tuesday, we do have new home sales, a monthly report, consumer confidence for May, along with consumer inflation expectations, right? So now we understand what macro data is coming out this week. So let's move on to the charts, okay? So we're going to be covering the Australian dollar, the euro, the pound against the yen, USDcad, gold, and we're just going to quickly have a look at the US dollar. Okay, so firstly, let's just have a look at the US dollar. These charts are all in the 4-hour time frame, just because in my opinion, when you look at the 4-hour and when you mark your zones on a 4-hour, you can see a lot more, like you can see a lot more higher time frame ranges or order blocks or key levels of interest. So let's talk about the US dollar, right? So the US dollar, so believe, yeah, so to start the week, we did rally up to these previous weekly highs and we failed to break above, which is this high time frame range, right? So we did fail to break above this range here. If we did get some nice candle body closures above this range, I could see continued strength for the US dollar. But with the macro data that was being released, it was actually quite mixed last week. But yeah, like we did fail to break above, and once we came to these lows here, we just melted down to these previous key levels, right? So we can see the US dollar depreciating with weakness. Well, actually, yeah, with general just weakness in the economy, because like to end last week, there was a lot of weakness in the employment data reports, which was actually, which was a bit of a sell-off on the US dollar, right? So once we failed to break above here, we did kind of just we did accumulate liquidity, and we did push further to the downside, right? I wouldn't be surprised if the US dollar comes up here to generate, a better supply zone to continue selling pressure down, right? And then with the data we do have coming out this week in the States, we do have, the only impactful data that we do have is your retail sales and probably your producer price index, and especially your CPI data, like especially on Wednesday. So I wouldn't be surprised if price does rally up prior to these reports. So I wouldn't be surprised if price comes to 90.500, right? And then we generate a nice 4-hour candle body resistance at this low. I wouldn't be surprised if we actually trade in this little range here, or if we retest this previous low here, right? We kind of replicate this flush move to the downside. Yeah, I mean, it just depends on the data that is coming out. But what we have noticed with the US dollar, since it is a safe haven pair, with positive data, that doesn't get put, like investors don't put their money with the positive data into the US dollar, because the US dollar acts as a safe haven. It only appreciates in times of uncertainty or in times of fear. If you don't believe me, go back test any historical events and have a look for yourself. All right. So if we do see some positive data coming out, all that money is going to be flushed into or dumped into US equities. So Dow 30, Nasdaq, S&P, because that's showing more consumer confidence and more strength in the US economy. It is not going to go in the US dollar. Like I just said, the only time US dollar strengthens is when there's fear and uncertainty, right? So with that being said, what I'm looking for is if we can generate a bit of buy side liquidity, see price get better, push to a better supply zone, whether it may be 9,500 or even 9,700, I won't be surprised. I doubt it's ever going to come here. Or your technical analysis, we might see 50% retracement of this flush move here, right? So like I said, I wouldn't be surprised if we trade in this little range again and then push further down if we see these positive reports. Okay, so enough about the US dollar. Let's go on the Australian dollar, right? So with the Australian dollar, we did have a rumor, not a rumor, it was actually factual, sorry, about China. I believe it was China leaving their trade agreement with Australia by not importing as many goods, basically forcing a bit of a trade war. We did see prices freaking drop after that report. I believe it was this candle here. Yeah, I believe it was this candle here. But we can see how our key levels match up, right? So price did pull back here, and then honestly, you look here, we got a nice counterbody support here, wick low here, counterbody at the key level high, wick low here, and a bit of a counterbody high just above our key level, right? Price failed to break below, so that wasn't enough fear. That wasn't enough fear to remove all the optimism in the Australian economy, right? And for all I know, price could have pushed up knowing that the federal budget is going to be released next week, and we could see price push down, price being pushed up to a better supply zone. And we could see price push down a little bit and then continue up, right? That is a possibility. If the report comes out completely negative, I doubt it will. Like it's more than likely going to be positive for the Australian economy, because compared to what was released from the previous statement, I guarantee they'll be flushing a bunch of money in certain industries, right? And then if they're dumping if they're dumping like billions of dollars, right, into certain industries, that's not going to decrease the value of the Australian dollar. Yes, it's going to depreciate because they're spending and such, but it provides a lot more optimism in the Australian economy because they're increasing jobs, they're increasing labour, and they're overall just increasing growth in the Australian economy, right? They're developing it. So that's enough about fundamentals. Let's look at the technicals, right? So as we can see here, we were in this high time frame range for like 3 weeks, right? Playing from 78 down to 77. So there's like a little 100 pip range, right? If we fail to break below here, if we fail to break below the 78-cent mark, we can see a nice 4-hour candle body support even on the 1 hour. I can see definitely buying pressure up to continue to this next zone at 79, but I'm very cautious because last time we did come up here, we did actually wick high and then start to melt down, right? But I won't be surprised if we actually do come down to the zone here. We just need to be careful and understand what Dixie is doing and how it's reacting to certain key levels, right? So what I'm looking for on a technical basis is if we can, your kind of medium risk buys is if we can do like a nice counterbody support at 78, right? 78 level, okay? Or I would not be surprised if we dip down to these lows here. So yeah, I wouldn't be surprised so your high risk buys, if we do come down here at the 77-cent mark, wouldn't be surprised if we actually come down here. Or if I'm just going to go off by the key levels. But what I'm looking for, like a high risk entry would be here at the 70-cent mark. If we can create a nice counterbody support at 78, I can definitely see buying pressure up. So that would be like your safe buys if we break and retest at this level here, okay? That would be your safe buys. Definitely. So yeah, that's what I'm looking on the Australian dollar. I wouldn't be surprised if we kind of break below this range. Kind of accumulate, generate some liquidity. See price get pushed to a better demand zone. That is definitely a possibility. But at this point in time, high risk buys at 77, and we can say safe buys upon a break and retest at 78 flat, right? So let's go on to Euro USD. So Euro USD, it was restricting a higher time frame trend line over the last month. Fortunately, we did break below, and if we can see here, I do like to use my technicals. Like, I am a bit of a macro trader, but I like to use my key levels because they work a lot of the time. So that being said, we did come down to this intraday low. We failed to break below, because if we did fail to break below, we were most likely going to shift down to this range here, where we had this little high time frame range here, right? So once we failed to break below that, we did shoot up. We did have a strong impulsive move to the upside with US dollar weakness. Did accumulate a little bit at this little key level, and we shot through to end the week, right? So if we can come up and kind of respect this, like this steep and narrow high time trend line, I can see continued buying pressure up. I would not be surprised if we can retest 120,700 or even 120. Yeah, I'm gonna say 120,700. Retest this little demand zone, generate a better demand zone for buyers, and continue buys up and continue to the next high, right? Because the last time, because this range here, this is a very sticky range, because we did trade in this little range here for about a whole month, right? And we did dip low a bit, but I wouldn't be surprised if we do. I wouldn't be surprised if we do strongly reject this level to start the week. And if we can get see price get pushed to a better demand zone, and that leads more to my bias of US dollar, creating a bit of buy side liquidity early in the week, so we can get our nice upper wick on our safe haven currencies, and a nice lower wick on our risk assets, right, or risk currencies. So that's what I'm looking for in a euro. Your high risk buys here. If we break and retest above 121,700, I can see continued buying pressure up. But like I said, wouldn't be surprised if we see a bit of a pullback, right? Would not be surprised. Which matches with these candle body highs and candle body lows, right? So let's go on the GU. GU has been ranging. Like it's been ranging hard. Like early in the year, it was like so impulsive. Like, when trading GU early on this year, it was just like pumping, literally, with so much optimism from Bojo and the Bank of England members. Just from the Bank of England, not decreasing their interest rates, keeping them retained at I believe it's 0.1%. Just keeping them retained and avoiding negative interest rates. Because I believe most major economies at the moment, they're at 0.1%. So with that being said, we can see GU respecting a high time trend line. So we did. So to start the week, where were we? So to start the week, we did come to these lows and we did trade around the lows of our trend line, right? But as we can see, it did not break market structure, right? If we did come below in this range, to me, it would have been a bit messy just because of what happened here previously, right? But fortunately, that didn't happen, right? So we did react strongly at these levels here, and we did continue up, and now we are still respecting our high time trend line from the start of April, right? So with that being said, what am I looking for next? Okay, because we got GDP, I believe it's GDP trade balance data coming out. Yeah, GDP trade balance, house price index, manufacturing, industrial data. So with that being said, if that all comes out positive, like what I'm looking for, I wouldn't be surprised if we see price get pushed to this demand zone here. That'll be high risk buys at 1.39230, which is about 60 pips away. See price get pushed to a better demand zone, and like I've been saying, it will make more sense for this bias to happen for US dollar to gain, to start the week. We can get like our weekly upper wick, right? So that being said, I wouldn't be surprised if we get pushed to this demand zone and still respect our high time frame trend line. I can see buying pressure up. Your safer buyers if we break in retest above 139.980, right? They are your safer buyers, just because of how we failed to break these highs above here. So if we finally break and retest above here, this thing's just gonna pump. Like, I guarantee you this thing's gonna pump, because for a fact, I guarantee you there's a lot of buy side liquidity above this level here. Why do I know that? Because each time we have come to this level, we have just strongly rejected it. But if this positive data matches up and we see US dollar freaking melt, like freaking melt, what I'm looking for is if we can come down, if we can come below 90, I can see a lot of buy side liquidity with GU, right? So I guarantee you this thing is just gonna pump up. It's like, to me this is like to me this is probably gonna be your safest move of the week, right? But I wouldn't be surprised to start the week we see some buy side liquidity and we get a strong pullback, right? But what I'm looking at, if we do see a nice candle body support up here, like I said, continue buying pressure up, right? Alright, so with that being said, that's my bias. I wouldn't be surprised if we do a little pullback to 1.39200, break and retest above 1.39950, which is very close to our PPL of 1.44,000, right? 4,000, yeah. 1.40, 1.40 on the dot, right? So with that being said, that's what I'm looking at on GU. GJ is very similar. GJ, we didn't have the strong impulsive move because there was weakness in the employment data report, which devalued the US dollar. With GJ, we have been in this bit of a range. We are failing to break below 151.100. If we can break and retest below 151.100, I can see some high risk sells, or I can see some high risk sells if we break below and retest. But I wouldn't want to be selling GJ at the moment, right? We've got more of a bias if we can take some high risk buys, and then we can respect our key level and respect a high time frame trend line, right? So there's not much I can really say on GJ because I really just explained what data we do have coming out on our GU analysis. So what I'm really looking at is possibly a high risk buy, at 151.050. That'll be very high risk. Your safer buys is 152.180, and look, when you go to GU, we're kind of at the same range, right? We got this range where this has dipped lower a bit, but now we're up here again, right? GJ is pretty damn similar, if you ask me. Matches with this previous high here, right? And these previous highs here, right? To me, there's a lot of buy side liquidity when it comes to the sterling. So sterling, I guarantee you, once you break and retest above here, this thing's going to pump up, right? Guaranteed. But in order for that, I would need to see a lot of positive data in the UK economy, okay? So we do have a lot of high probability trades in the pound this week, right? Like I said, we might dip lower, generate bit of sell side liquidity, see price get pushed to a better demand zone, and we could continue this rally. And to all you technical analysis out there, do not tell me that this is a head and shoulders pattern, because that is a load of BS. Alright? No. I'm going in depth and telling you the macros about this, right? I'm just telling you safe entries, high risk entries, and obviously do your due diligence, understand where you want to place your stops, understand where understand, you got to put a stop loss where your trade is completely invalid. Like, you take a high risk entry here, place a stop loss at a certain level. It's up to you to choose. I'm not going to say where. And you go, all right, if it breaks it below this certain level, the trade's invalid. Wait for another setup. Okay. These are the setups I'm talking about, right? So if we can see break and retest above, let's say 152, 200, I can see a lot of line pressure up. We could replicate this flush move here, but that all depends, okay? That all depends on the macro data that gets released. All right, let's go to USDCAD. So USDCAD is obviously the inverse of the major currency pairs already covered. So we can see here, Bank of Canada, this was like an intraday low, right? We were just consolidating in this disgusting high time frame range. Disgusting. Then we had the Bank of Canada actually announcing bond tapering in the upcoming months and even hiking interest rates as early as next year. Right? What does that do for the Canadian dollar? Makes it freaking shoot, right? And then we see freaking oil rally up, right? Not West Texas Intermediate. So we look at Brent crude oil, right? And we look at Brent crude. I'm not gonna look at the dates because I know for a fact like you can go back test the dates against USDCAD and you'll see a massive correlation with the price of oil, right? So the price of oil like nearly at like $70 a barrel now. We did see USDCAD gain a lot of strength. Why? Because the Canadian economy makes so much money from exporting oil because they got so much of it, right? That's where they make their money, right? So let's talk about on a technical perspective, right? So Bank of Canada statement, US dollar weakness, right? From end of last week, we did accumulate throughout the whole week, right? Played in a disgusting high time frame range, melted down with US dollar weakness, right? So US dollar weakness. Actually prior to this was the price of oil rallying, right? And backed with positive Canadian macro data. So that being said, what am I looking for trade wise? What am I looking for? Am I going to expect USD CAD to rally back here, rally back up here to get push a better supply zone? Probably not, because to me that is a lot. That is a lot, okay? Right, if I see a lot of USD US weakness with the macro data that gets released this week, and with my bias confirming, if we continue to just see price get pushed to a better supply zone and continue down, I could see USDCAD come to these areas here, maybe generate a little high time frame resistance. When it fails to break above, I can see your high risk sells at this level here, which will match with this candle body, with the candle body open here, right? So that's potential, but just because USDCAD has just been on a strong decline, right? What I'd like to see, this will be a bit of a high risk entry here at 121,900. Bit of your high risk sells here, or we could take safer sells here, following the analysis, following USD weakness. If we can break and retest below 121,400, I can see selling pressure to 120, right? I'm not going to go back to like when price was this low last time. That was like back in 2018 or 2016. Too far. You can go back and look at it yourself. So that's what I'm looking for on USD CAD. So positive macro data for Canada. And if we see positive macro data with US, as I mentioned, money will be dumped into US equities, not the US dollar, right? But like I've been saying, wouldn't be surprised if we see a nice weekly upper wick on the US dollar, see price get pushed for a better supply zone, right? Wherever that may be, we need to react to the markets, right? I wouldn't be surprised if we actually come to 9,700, okay? Would not be surprised. Or if we can get a 50% retracement of this candle body, right? This 4-8 candle, wouldn't be surprised. So I'm not going to analyze oil, but I'll be analyzing gold, Oh no, hold on. I think my gold chart's all messed up. Yeah, it's actually all messed up. I might have to cancel gold. Is it gonna work? Damn. Yeah, I don't know. For some reason, TradingView like doesn't add my key levels on gold. For some reason. All right, here we go. I just had to fix this up a bit. So, all right, let's go to gold, right? So as we can see, didn't mention on my weekly analysis here on YouTube. Didn't mention staying in this higher time frame channel. Fortunately, we did break below, but with US dollar weakness, and especially with weak unemployment data, we did see the US dollar start to rally up high. Not the US dollar. We did see gold start to rally up high. We can see here that we did fail to break and retest below. Like they were wick lows, sorry, but on a higher time frame, there was no candle body lows. Candle body retest below this 1766 or 1767 key level of interest, right? So once we failed that, once we failed to break below here, as we can see with the retest, we did retest above here, retest here, then we did get an impulsive move to the upside, accumulate, impulsive move, right? So now we are respecting our higher time frame key levels, okay? Yeah, so we are respecting our high time key levels. I wouldn't be surprised if we, push down. Wouldn't be surprised if we kind of replicate this impulsive move to the upside, right? Wouldn't be surprised if we actually come down to 1813. See, like I did mention, US dollar gaining strength to start the week. US dollars gaining strength to start the week. Your high risk buys, if we do come down here, would be at 1812. That'd be very high risk, but just the way how gold moves and operates, I don't see it coming down to this level here. I wouldn't be surprised if we do like a candle body support at 1825, still respecting a high time frame channel, right? So I wouldn't be so your high risk buys will be at like 1825, which is only 50 pips away. See if we can do like a nice candle body support, and to me is about a, I don't know, like I think that's like a 65-70% retracement of this impulsive move. So yeah, wouldn't be surprised if we do like a nice candle body support at these lows here and continue buys up to the next key level, which would be 1850. Okay, safer buys if we can break above 1840. Okay, so that's what I'm looking for on gold. So yeah, this is just my weekly analysis. If you enjoyed the content, please be sure to like and subscribe and share around. And hope you all have a great trading week. And yeah, enjoy.